I want to save you $5,000 and just give you this information for free. You see, last night I was on Instagram, and as I was scrolling through, I kept seeing the same ads over and over again, and it's these mortgage brokers, most with pretty bad lighting and some cringy scripts, and they're talking about how you pay off your mortgage in 7 to 10 years. And you need to know you can pay off your mortgage in 7 years rather than 30. That is possible. And if you do that, you will save literally hundreds of thousands of dollars in interest. But what happens if you click on one of those ads and go to one of these mortgage brokers' webinars? Most likely they're going to try and sell you their $5,000 special system for how to pay off your mortgage faster. And I actually don't think that that's a good deal. So I just want to save you the $5,000, give you the information for free, and do that in less than 10 minutes. I'm Ed, an economist here at Opus Partners, and this is Property Now. There are 3 different ways to pay off your mortgage faster, and the first one is the one that most people think about, which is just asking, should I increase my repayments? And this makes a monumental difference. So let's say you had a $500,000 mortgage, 7% interest rate, you're currently paying it off over 30 years, your weekly repayment is $767. And the amazing thing, which most people don't realize, is that over the next 30 years, you're going to pay $697,000 back to the bank. It is outrageous. You are going to pay more in interest to the bank than paying back the home loan itself. But what happens if instead you said, okay, I'm going to try and increase my repayments and I'm going to pay it off over 10 years? Well, your mortgage repayment would go up. It would actually go up to $1,338. That is an extra $570 a week. It's a lot of money. But how much interest would you save? Well, not only are you going to get mortgage free 20 years earlier, you are going to save about $500,000 in interest just by paying it back early. And remember, this $570 a week, you might be sitting there thinking, oh, okay, well, it's going to cost me an extra $570 a week. That's just money going to paying off your debt. You'd be paying that back anyway at some point. But if you do it early, you're saving $500,000 in interest. And if you want to do this, you just call up your bank, you tell them that you want to pay off your mortgage faster, they'll walk you through it. Now, there is something very obvious. Most people don't have an extra $570 a week lying around. That is a lot of money. And that's where you get to the second way to get mortgage free early. Now, you might not have a lot of cash right now. I mean, interest rates are high and you might be struggling with your mortgage as it is and think, Ed, I don't have a lot of money right now. How can I still pay off my mortgage early? Now, here's the thing. Over time, your income tends to go up and it's usually by about 4% per year. But your mortgage repayment stays the same as long as the interest rate doesn't change. So what happens for a lot of people is as they get pay rises, they think, that's great, I'm going to go and spend that extra money. But here's what one homeowner I just talked to does. So every time she gets a pay rise, she goes to the bank and she increases her mortgage repayments. Now, she doesn't take the full pay rise and give that to the bank, but if she gets a 5% pay rise, she goes and she increases her weekly mortgage repayment by 5% as well. So for you, you might start at $767 a week. You get a 4% pay rise, you go and increase it to $798 a week. The next year, you get a 4% pay rise, you increase your mortgage repayment to $830 a week. And this makes just the most outrageous difference. In this example, let's say you just kept on doing that. You'd shave 14 years off your mortgage and save $308,000 in interest compared to just doing the normal thing, paying off your mortgage in 30 years. And the really good thing about this is it's so simple, as long as you follow it. Okay, here's another option. Interest rates are really high right now. And when interest rates drop, you've got a choice. You could either say, thank God for that, and decrease your mortgage repayments, keep paying your mortgage off over 30 years. Or you can say, okay, I'm going to keep my mortgage repayment high and I'm going to challenge myself to pay off that mortgage faster. So let's say that interest rates drop and it's just 1 percentage point. They go from about 7% down to 6%. And I actually think it's pretty likely they'll drop further than that over time, but let's stick with it for now. If you keep paying your mortgage off as if the interest rate is still 7%, well, you'll pay off your mortgage. You'll be mortgage free 6 years faster and you will save $250,000. So even if you don't have a lot of spare cash today, you can still create a plan to pay off your mortgage faster and save hundreds of thousands of dollars in interest. But there's one more way to pay off your mortgage faster, and this is the one you see on a lot of those ads. And if you're enjoying this video, make sure you hit the subscribe button. We release new videos every Monday and Wednesday. Okay, let's get to that final way to pay off your mortgage. And the last strategy people use to pay off their mortgage faster is using a revolving credit or an offset account. And I'm going to show you some of my real bank accounts in a second just to show you how this really works. But the idea is that you take a portion of your mortgage, you set it up as a revolving credit account, and that basically just works like a big overdraft. So if I put money into that account, I save interest for some part of my mortgage, but I can still take that money out if I need to, just like an overdraft. Now, there are a couple of ways that people use this. So some people will put their pay from their job into this account. So on their payday, money comes in, and while the money is in there, they're saving on interest. As they gradually spend their pay packet each week, they've got less money in there, so they pay a bit more in interest. And this can make a small difference, but on its own, without extra payments, it's not huge. But if you want to learn more about that and how revolving credits work, here's a video I recorded about everything you need to know with revolving credits. The other way is just to transfer an amount of money into this revolving credit or offset each week, fortnight, or month. So I'll show you how I've set this up with some of my bank accounts. So I've got my main mortgage here, and it's $264,000. And yes, that is one of my real mortgages. And then what I've done is I've got two other accounts. First, we've got my mortgage buster. So that is my revolving credit or offset mortgage. So it's $28,600, and that is on a floating interest rate. And then what I do is I have my offset account. So I put my money in here every single week. At the moment, there's $2,200 in there. And the way this works is this $2,200 gets taken off this $28,000, and I only pay interest on the balance. And at the moment, that'd be about $26,500. And my strategy is I put the money in here into my offset account every single week, and then once a year, I take all of that money once it's built up and I pay it off my main mortgage. And that just gives me a little bit more flexibility because if I needed to take that money out, I've still got access to it. Now, this is called the mortgage buster strategy, and that's how I'm paying off this mortgage faster. And that is basically what all of those mortgage brokers talk about in their ads. And of course, if you are one of those mortgage brokers trying to dress up a revolving credit or dress up an offset account as something more, you're probably saying, no, there's more to it than that. So I want to tell you a little story. Now, I recently had an investor, Livy, on the Property Academy podcast, and she saw one of those ads online. So she went to that mortgage broker's website and they said, yep, we're going to help you pay off your mortgage faster. Now, Livy was actually pretty clever. She had seen some of my videos. She knew about revolving credits. So she asked the mortgage broker, is this just a revolving credit? He said, no, it's not just a revolving credit. So she paid the money, $5,000, so she could find out what that secret strategy was that this mortgage broker had. Now, in the end, after she paid the $5,000, what was the strategy? You guessed it, it was a revolving credit. So just be really careful if you're talking to a mortgage broker, trying to sell you some fancy secret course with some fancy secret strategy, because it is possible to pay off your mortgage faster, but actually it's pretty simple and most of that information is free online. Some people in the mortgage industry just aren't doing the right thing. And if you're looking for a good mortgage broker who won't try and sell you their $5,000 course, you might like to check out Opus Mortgages at opusmortgages.co.nz.